coming to you from a remote location, not from not from Dallas Trading Floor. We're still on quarantine here. I'm here basically to answer your questions today. Just wanted to kind of briefly go over the market is rallying today, which is very interesting. This is, I believe, a relief rally. There's been a lot of stimulus. I think there'll be a lot more stimulus as well. So I'm anticipating we should be up today. Now, the question, unfortunately for everyone, the numbers are starting to roll in for the unemployment. A lot of people are going to be laid off, unfortunately. I mean, this is a kind of a tragedy. And I think we're going to go into a recession. But right now, the market is rallying. So right now, the Spider, which is the largestly held ETF in the U.S., is trading at 258.74, and it's up today almost $5, which is amazing. Microsoft is also up, but I don't think this is a very good time to get back into the market. I don't think we have bottomed, and I think this is a relief rally. What I'm looking for is potentially 275 on the SPY. That's when I'm going to start looking at possibly. That's when I'm going to start looking at basically moving against with a short. Currently, I am all in cash. I went all in cash at the end of Friday last week. I was able to eke out a little bit of a profit shorting the SPY. Not a whole lot, only a few $100 as it adjusted towards the end of the day. That might be the case here. Poop out towards the end of the day, and in which case, if it weakens, I will short. But currently, I am all cash as the market direction is up. Again, the market is in a relief rally, and there's been a lot of, there's the Treasury Department has been pumping a lot of money in, and they've basically said that for small businesses, there's going to be a blank check. That's why I believe we're seeing this time. Now, can it be sustained? Well, only time will tell. I suspect, though, that this we will retest the lows, which in this key SPY, that's the S&P 500, the most broad of the ETFs. I suppose in the next 5 to 6 weeks. But so we have time. I believe that possibly, at least this week, the market may get going higher. There's just a tremendous amount of liquidity that's being pushed into the system. One thing I'd like to note for everyone is that basically we're in a deflationary spiral at this point. We are still, and by the way, this is just wanted to answer a question. Yes, we are. I suspect we will. Now the question is how well we do at the end of the day. It's really a day-by-day thing, as we don't really know what the market will be. Hard market to judge because we don't have any real clear direction. We seem to be moving all over the place. That each time the market corrects to the downside, there's new stimulus. So it's a very, very hard market to trade. I wouldn't be in it either. All cash, and I haven't. I've been primarily shorting, which is the largest. There is one stock that is doing extremely well today, and that's Microsoft. It's up almost over $8 a share, which is amazing. I suspect, though, that rally will be short-lived because I do not believe that it can be sustained over time. Currently, Microsoft is selling. Let me just get a quote here. We have Microsoft selling for current. I believe is overly high. I will probably see retracement, but again, I was a seller of Microsoft, basically at a very important for Microsoft. Now, the reason I'm picking out Microsoft is that is sort of the ultimate bellwether stock currently. Do even in a bad market because of the cloud and other things that they have. They have a global position. So the flip side of mobile, actually, it's still less than 40 turn, probably a buyer of that. I don't think we've seen the bottom in the oils yet. Do you think that the cloud business is a factor? I absolutely think the cloud business is a factor with Microsoft. People are staying home. We're reorienting the whole workforce. I think that because of this thing, I think a lot more is going to be done remotely. I think a lot of real estate REITs are going to have trouble because people just won't be, the demand for office space just won't be as high. I do think this is going to accelerate the movement to the cloud. And in that case, I believe that Microsoft really, even basically Amazon and Microsoft are the two companies that are best positioned. In some ways, I think more positions on due to the fact that Amazon competes with other companies. Microsoft, when you buy Azure from Microsoft, really the enterprise companies, they basically keep their data. They're not mined like with Amazon and with Google. So I think a lot of companies are going to move to the Azure cloud, and that's going to make Microsoft even more unassailable. I think in terms of the FANG stocks, and actually Microsoft's not technically a FANG stock, I think Microsoft is best positioned to ride this out. That said, I think you're going to see the market move down. I mean, we're in what they call a sucker rally, in that I think we're moving up, but I don't expect this to last. I think that by 3 and 4 weeks from now, I think we'll be testing new lows. So the key level I'm looking at is the 170 is 275 on the spider. That's what I'm looking at. Okay, what can you tell about tops? Let me take a look at tops really quickly here. I'm not familiar with it, but let me just look at the chart and see. Yeah, okay. Wow. No. This is trading for 53 cents. I don't think you want to be in this. In this market, it's very, very dangerous to go long on anything because this is a down market. This is the market trend right now is in correction. We're still in correction, so it just doesn't really pay to be long on anything in this market, just due to the fact that 4 out of 5 stocks in this kind of that you have to be very, very aware of. Hold on one second. I've got a low battery situation, so let me get the machine here. 1 second. Alrighty. There's always these technical difficulties that I am not the greatest at, but here we go. There we go. I think I didn't have my thing plugged. No, I do. Okay, futures. The futures market. What I do to look at market direction, what I do every night is I look at the futures, to how the futures are trading on the indexes. And that's really where I get the idea of whether or not I'm going to short or not. So I've been looking at those futures. Right now, we're trending up, but I suspect that by the end of the week, that's going to change. But you never know. I mean, they're just pumping so much. They're just pumping so much dollars into the market that basically Mnuchin gave the market a blank check today, basically saying that there would be no limit to the amount of dollars that they would put in for small businesses. The real danger here, of course, is that after this coronavirus thing ends, not most, but a third or maybe more of the business may not reopen, and that will be very serious. I mean, we're going to have some of the numbers that we've had in many, many years. So a lot of people are just basically on the edge. They don't even have to make it paycheck to paycheck. So I think there's going to be a real shock in the city, and it's just a tragedy all the way around. But there is a way you can play this, and the way I think to play this is keep your powder dry, wait for the change in direction in the market, and then short the market. That's my primary strategy at this point. I'm not going long anything just because I feel that, to be long right now is just not to go with the market trend. And as they always say, the trend is your friend. So right now the trend is a corrective trend and not a upward trend. So there you go. Okay, let's see. Thoughts on employment numbers Thursday. I think the employment numbers will have a tremendous effect on things. I don't think people have really dialed in. I mean, I know that, the market is forward looking and everything, and everybody says that, but I don't think that they've dialed in the amount of unemployment that's going to happen. I know just anecdotally on my own, I have friends coming to me and asking to borrow money. I've never had this happen. I think that there's so many people that are on the edge. It's just not funny. I think that a lot of banks are going to have trouble collecting. I think there's going to be lots of defaults. I don't relish this. Believe me, I don't relish this. One of the things I do believe that's going to happen is I believe that the market for real estate is going to change drastically. And the reason I say that is because there are many high-priced houses that have very large mortgages on them, and many of those will not be able to be serviced. And I think a lot of them will go into foreclosure. So I think in the next maybe year or two, you're going to see real estate on sale again, just like in 2008. I did fairly well in 2008. I don't relish that, but I did. I mean, I was able to buy several houses for 40 cents on the dollar here in Dallas. Now, I don't think Dallas is as vulnerable as some other places like New York. I think New York is extremely vulnerable in terms of, I know I'm off the topic here, but I think that there's going to be an opportunity in real estate that is going to be tremendous, and those who get ready are going to do very, very well. Now, let's see. Please touch on FHA financial. The MFA, it's like everything else. Unfortunately, the investment business, I've been around quite a long time. I mean, I've worked for several of the big accounting firms like Deloitte and PricewaterhouseCoopers, and the financial advisor industry, what I call the retirement industry, has a lot of very, very difficult exams, and I think they're very good, very worthwhile, but unfortunately, they don't really teach you how to make money. I mean, it's a real problem. They teach you how to balance a portfolio and all that stuff, but that's all done by the funds anyways. What they really don't tell you is what sector of what segment of the market are we in? What's the market trending? I think if you want to just make money in the market, the best thing to do is to start with the basics. And where I started, it's helped me for years, is with all the books by O'Neill of Investor Business Daily. I think that's the best place to start. The MFA is a very difficult exam, but like a lot of things in this life, we think that we can just get a degree and it will help us. Well, I have an MBA and it didn't help me a lot. I mean, I had to go out and make my own luck. Unfortunately, I believe that a lot of people are going to go with the false hope that getting an MFA is going to lead them to riches, and I don't think it is. I think learning how to trade, a trend trade, is a better idea, and learning how to buy real estate is a better idea than that. Why Fed doesn't let's see. Okay, sorry, I was reading that one. Why Fed doesn't want us to take money out of the banks? Well, the reason that the Fed doesn't want us to take money out of the banks is very simple. If they take money out of the banks will become insolvent, and that's not a good thing. I recommend to everybody, if you have cash in a bank right now, I do what I do. I mean, I took out a little bit of cash. Now, I don't have all my cash out of the bank, but I do have cash on hand. And I will probably draw more this week, just because there are going to be opportunities that come along to you. I had an opportunity, as I said on this program before. I mean, I had an opportunity to buy a very expensive watch for nothing. You'll have opportunities to buy cars, all kinds of things for less than they're worth. Let's see. Why the Fed doesn't want? Okay, the reason. Yeah. Sorry, Jim. Oh, I meant MFA stock. I apologize for that. I didn't want to rant on you on MFA. I'm not, not against them, but let me just look at the MFA stock. Okay. Okay. Yeah. Boy, oh boy, this just doesn't look good for me. MFA Financial, it's trading for 155 right now. You know, it's just red all over the place. I'd stay out of this. If you're not in, if you're in it right now, heck, I wouldn't be in this one. I just don't. I see a liquidation of this stock right now. It should be trading for about $8 a share, but in this market, it's trading for 150. So that's like 20% of its value. Stocks that go down that much, a lot of times don't come back. So, at your own risk, I'm afraid. Let's see. Do you have what do you look for when you short a stock? That's a very, very good question. What you look for, and we're really not in a period yet where we can really short stocks because we haven't had this downturn long enough. Typically, it takes about 8 to 10 weeks for these patterns to happen. But basically, what you have is what they call a head and shoulders. You can look this up on the internet. A head and shoulders pattern, and then there will be a drastic downward motion. Then it will come back to the 50-day moving line, and it will basically try to test this 50-day moving line 3 or 4 times. If it tests it 4 times, it is an absolute short. Now, that's very, very high level what I said, but typically shorts are stocks that everybody owns in their best portfolios. So I'm looking at potential stocks like some of the FANG stocks. That what'll happen is right now we're in a recovery rally. The market, they'll pump money into it. The market will recover, and all big boys then in about 4 to 5 weeks are going to sell at the top price. The retail investors are probably going to be left holding the bag. I'm not being cynical. I'm just telling you what I've gun apples down. Yeah, it's not. I mean, a lot of people. I think you should have food on hand. I'll come to that. Hopefully it won't. I don't think food supply is solid, but I don't think we've seen a lot like this since a long time. I mean, I think people unfortunately in New York and Washington, places like that, where they're just robbed because they're not. I mean, as sad as that sounds, I think like here's a problem. You're going to dispatch moves out of the so ExxonMobil. Yeah, absolutely. ExxonMobil and Chevron are what they call integrated companies, meaning that not only do they produce oil, but they transport it and they refine it. So they really make money 3 ways. The stock that they have, the inputs are going to be a lot less expensive, but the refining and the transport are still going to have the same markup. So I do see a recovery in those stocks. Now, I do believe that these stocks are going to provide some of the best opportunities. Now, you have to be very, very, very selective when it comes to oil stocks when this thing bottoms, because many oil stocks won't be worth shit. I mean, pardon my French, but Occidental Petroleum and Concho and companies like this, they're not going to be worth hardly anything. But Exxon and Chevron probably will, because they're integrated. They have long-term contracts, and they have good balance sheets. And even though I'm a big fan of Tesla and I'm a big fan of electric cars, I don't take over all at once. It's going to take a while. And well, besides that, is in just everything. So I don't think we're going to get rid of our uses of oil. It's going to change, but I don't think it's going to get rid of. So therefore, Exxon and Chevron potentially represent very good value them now because we have this hasn't shaken out yet. I know this is now. It'll tell you what I'm doing, and I'm in cash. I'm waiting for indexes, and the way I short it, I will go. I'll move down is primarily shorting the SP, also shorting the Dow Jones, the Dow Spiders, the DIA. Again, to short anything, the market. And again, I don't think we're going to see. We probably won't see a reversal until the spider gets to, I believe, about 172, 175. That we will see a reversal to that point. TCA long or short. Let me take a look. Let's see, TZA. Small cap, yeah, bear. Okay, this might not be a bad one for right now. That's interesting. It's changed direction. Okay, this tells me something. This is very interesting. I think the market may be getting ready to change direction. We were up this morning, but I think it's probably gonna falter and come down a little bit because the TZA here, which is small cap bear. Now, here's the thing with small cap. Most of the action is going to be in large caps, but small cap is going to be the sort of the complementary to the Russell 2000. This is mostly smaller banks. So, okay, so it's up. Okay, it was down significantly. Let me look at this. This is real interesting. This might be an interesting play. Okay, it's definitely up today. So, okay, there's stress on the Russell 2000. It looks like we may see a reversal tomorrow. You never can tell, but these bear ETFs are harbingers of what's going to happen in the future. They have some fortune telling capabilities. What is the definition of recession? Recession is a technical term of a movement of the market down more than 20%, and we're definitely there. So, well, now the question is how long is this going to be? I think we're going to be in a recession, and I don't think this is going to be. I hope this is going to be a short recession, but I don't think it. I think there's going to be a lot of fallout. A lot of companies are going to go bankrupt. It looks like Macy's is very close to going bankrupt, and that's a great company. It employs a ton of people. I think we're going to get de-retailed in this country. I don't think that's an amazing thought, but I think we're going to. When should I sell my shorts? Okay, well, the thing about shorts are you want to close your shorts when the market changes direction. Shorts really work when if the market turns in a downturn, that's when you short, and then you want to watch it very carefully and put a stop loss on it. I know this sounds strange, a stop loss on a short. How do you do that? Well, what you do is that you set a buy to close, and with a limit with a stop loss. So the way you initiate a short is the first thing you do is that if you don't have stock, you basically go buy to the say buy X number of shares. Well, how many shares? You can also, since you don't have, this will create a short sale. You'll borrow the shares from you'll sell them, and then hopefully down, you'll be able to buy them back at a lower price. That is a short. Now, during the period of time that you own the stock, you do have to pay the dividends or any other fees that are there. And then when you close out the short, you have to buy back for a lower price. So what do you think? That is the $4,000 question. I was going to be we're going to have last week, and basically the low of the market as determined by the spider. The reason I look at the spider is because one of the most broadly it traded ETFs, and it tends to track the S&P 500. The spider was 218, and I believe that we're going to have to go down to that point in order to test the bottom, where the bottom is going to be, and then it's going to vary between there. But right now the market is moving up, so I do believe that we're going to see a turn, and I think the turn is probably at 175 here. But right now it's trading 52, so it's about 10. So yeah, I think update tomorrow. But when the spider gets too high, I don't think that the upward momentum is going to be maintained. I think change directions, and I think when we do, at least to test the low. Oh God, Russia is in a real bad. So they used to have a really good economy in Russia, but currently the economy of Russia is the same economy as New York State. Not to rag on New York State, but you know, New York State is the third largest state, soon to be fourth largest, and is their market really don't produce anything that the world produces. Weapons, oil and gas, of course, has gone way down. Of course, they're in this battle with the Saudis to get production down. They want to squeeze out the U.S. Permian, and I think that'd be it's going to suck because it's going to hurt the economy of Texas. I mean, I'm already looking, real estate for sale for low prices. People know it's not going to be pretty, but long term, I think they're going to get. I think because Europe. I mean, they're going to try to make sure that their European market is compromised, but the Saudis can pump still cheaper than anybody else, and they're going to do it. Soil or they have, because now they depend on the welfare of the state. They have to have higher prices. Apple is a holder, a seller of Apple right now. Just like this, I think it's a wonderful stock, and I think it's probably one of the greatest. At least in my life, I'm a seller pretty much. The reason I'm a seller, not because the companies are bad, it's because of the general market trend. Basically, there's a saying: the trend is your friend, and right now the trend is correction. It's downward. So 4 out of 5 stocks are going to lose money in this market. There's just no way around it. So in this market, basically, I'm two things. I'm either cash or I'm short, ETF, which that's another thing. That is one area where that I do like is the short ETFs like the SQQQ. I wouldn't buy the SQQ today because it's going to be down significantly. As a matter of fact, I want to look at it because that's a real tell on the market in general. But the SQQQ, which I've recommended and I do like, it's down today. Yeah, it's down significantly today. It's printing at about 19. Let's look at it. Hold on. Let me look at the number. Yeah, it's trading down as low as 19. It started the day at 20. So it's down about $1. It's down about 3 or 4%. I do think when the market changes, when there's a change in the market, you want to buy that, and then you want to sell it when the market changes again. But right now, the market is on a bounce. It's bouncing up, and we're going to probably see that probably in the early part of the week. Now, I think when the job numbers come out, I think they're going to be absolutely horrendous. And I think even with all the pump that the Fed is doing right now, I think that's going to change things. Let's see. What are the benefits of trading a spider? Well, the benefits of trading a spider is the spiders are typically the largest held ETFs. Why is that important? Well, in a market like this, there's a lot of program trading going on, and liquidity is key. I mean, I don't know if any of you have accounts at Robinhood, but I don't know if you experienced where you couldn't trade for 2 days, and that was because the liquidity was denied, basically to Robinhood. Many stocks, even very good stocks, are illiquid in this kind of market. The spiders are the most liquid of all the ETFs. The reason I like the ETFs is because instead of trying to figure one individual stock out, you go more on trends. Like if the market is going down, you short the spider. If the market, if you think oil is, you short the XOP, which is the oil sector. You don't have to pick individual stocks. I think it's difficult to find one or two stocks that you could even be volatile market. There are some exceptions. One of the exceptions I think is Microsoft. Again, Microsoft is trading up really nicely today, but similar kind of action in Microsoft with more safety by trading QQ, the which is basically the NASDAQ. That said, is okay. Important level on, and I did very well trading Tesla earlier in the year in February. I'm totally out of it, but let me take a look right now. There's a very key level that Tesla needs to maintain. Yeah, it's okay. Right now, okay, it's bouncing. Yeah, Tesla is bouncing at 510. Okay, let me just take a look at the low for this. Just really interested. Yeah, 366. That's really interesting. Okay. I believe now I think this is a very interesting. Okay, Tesla is moving down today. This key support level for Tesla is 361. Okay. Right now it's trading for 510. And I believe it's moving down. This might be a very good short down to 6 down. This may be a very good short actually, down to that level, because it's already begun. It's already rolled over, and it looks like, yeah, this may be a good short actually. And I normally don't like shorting Tesla because I like the company, but yeah, this may be a short down to. Down to a lower level. I believe it'll retest at the 361 level, and then I wouldn't short it below that because I think that's a bounce there. But down to that, Tesla might be a short. Let me put that on my list. I'm gonna do some research on that and hopefully get back to you on that tomorrow. But Tesla, a short. Right. Okay. Great. That's interesting. Apple and Microsoft, not Amazon, in SQQQ. No, actually, they're all in the SQQQ, because what the SQQQ is it's the inverse bear of the QQQ. The QQQ is the NASDAQ 100. It's the 100 largest stocks in the NASDAQ. So the way that SQQQ works is that they take short positions on the index, on the QQQ. So no, it definitely has Microsoft and Amazon and are in the Qs. QQQ. What are the major percentages? Oh, thank you very much. I'm sorry, I misunderstood. Let me see. Let me give you an idea. I'd like to give you an idea of what the percentages are for the makeup of the QQQ. Hold on one second. Let me see if I can get that information for you. See if I can. Let me see if that gives me an idea of what use. Okay, here we go. Takes a second for me. Okay, QQQ Holdings, 11% micro, 11.6, 11%. Biggest two components of the Qs are Microsoft and Apple, then Amazon, then Alphabet, which is Google, then Facebook, then Intel, then Pepsi. That's interesting. Then Cisco Systems, it's weighted information technology and communication services, and then consumer discretionary. So basically, that's what the Qs are. Now the SQQQ, what they do is they say, okay, we think that it's a bear fund. We think that we're going to be inverse of that. So we're taking short positions on that, thinking that the overall market is going to fall. Today the Qs are going up, so the SQQQ is going down. There is another fund that is complementary to the SQQQ. It's called the T. That's a long fund for the Qs. I wouldn't recommend it right now because we're not in a bull market. We're in a bear market. In the bear, that's probably not going to do as well. You're much safer if you want to buy the Qs at all, which I wouldn't recommend. You want to be long the Q. So I know that makes a lot of sense. That's sort of the deal. Okay. Okay, exactly is an ETF? That's a really good question. What an ETF is, it's called an exchange. And what is that in an open-ended fund, you put money into a mutual fund and they buy more of whatever they're managing. What in an exchange is that people invest in various, then that fund is lying on the exchange. So the values of the underlying shares that are in that ETF go up and down depending on what the market is. Now, the largest ETF in the world is the SPDR. It's called the SPY. And that's a company called, is a SPDR. It's worth about, the value, it fluctuates, but the value is currently about $220 billion, which is an amazing amount of money. There are other ETFs out there that has various other things, like the QQQ is another one of these very large ETFs that mainly has NASDAQ, it has NASDAQ 100 stocks in it, mainly Apple, mainly Microsoft. And the value of these stocks, depending on what the values of these stocks is how much the value of the underlying ETF is. But it trades just like a regular stock. So if you want to buy the NASDAQ 100 instead of just buying the individual shares, because I mean, one share of Amazon of Google is like, it's almost $2,000. About, it trades between about $1,200 and about $2,000. Well, you can just buy shares in the ETF QQQ and get the same underlying stock that in Google. So that's really what an ETF is. Let's see. Okay, so new messages. Okay, let me see if I've got all this. Top 5 invest long term. Well, if I was a long-term investor, and I'm not typically a long-term investor, I'm not like Warren Buffett. I don't have this kind of money. I typically am a short-term trend investor. But if I was looking to go long here, I would be looking very, very carefully at the oils, at the Exxon Mobils and the Chevrons of the world. Why? Because eventually, when this is all done, those will have been very good values. I wouldn't buy them now, though. I mean, I wouldn't be a buyer. I wouldn't be a buyer of them now. But right now, Exxon, which is symbol XOM, is trading up, and it's 37.60 a share, which is almost its book value, believe it or not. So that's where I would be long term right now. But some of the techs, Microsoft long term is also very good as well. No, I mean these are the major percentages. I don't know what that is. Okay, what exactly is an ETF? Okay, I can answer that. Oh, here we go. Okay. Any good $100 stocks? In this market? No. Don't buy anything under $1. I know this sounds horrible. It's like, well, because you think, well, I buy the $1 stock and it's $2 and I make 100%. Not a good time. As a matter of fact, I'm very leery about buying stocks under $10. But there are some good stocks under $10. I'm not a fan of under $1 stocks. It's a good way to lose money, unfortunately. I'm sorry to be so harsh about that. By the way, I love this. Hey, thank you, man. I'm so appreciative. I'm trying to get better at these live streams. I'm live streaming also, by the way, if anybody's interested. I'm also live streaming on YouTube. Hopefully, they're going to let me live stream on LinkedIn. I put it in my application, so we'll see what they say. They may say no or yes. I don't know what they're going to say. But I'm broadcasting my home, as you can tell, with my great studio here. Bed sheet in the background. It's going to get better. Hopefully, I'm going to be let back onto the Dallas trading floor here in about a week, so I'll have better lighting and the whole 9 yards. So I'm sorry, this is kind of temporary, at least right now. Is the SPY a good shorting today at 260? Now I'm a little bit leery of shorting at 260. We're almost there. I want to see what's happening. I want to see if this is a follow through day or not. Now, what do I mean by follow through day? Well, I was going to short it, but then I saw what had happened overnight on the futures, and I just took the shorts off because I was afraid. And sure enough, it went up. This is kind of a relief rally. I want to see if this thing is going to go higher. I think it might go as high as 265, or maybe even. I think it's definitely a short at 275, but we're not there yet. So I wouldn't be shorting this right now. I'm getting ready though to short this, and I will try to be very proactive. By the way, if you send me your contact information at dallastradingfloor.com, just fill out the contact form there. I will try to send out email alerts if I can. I'm going to try to do that about what I'm doing and where I'm positioning, just in case you're interested in the email alerts. They're pretty fast and they go out. Right now I'm all in cash just because the market direction has changed, but I'm getting ready to short. Thanks for the question. I really appreciate that. Okay, comments on space. I made some really good money on space. I like it. I just think in this market, it's really not that I dislike it. Yeah, okay, it's trading for 15. 17. Okay. I think it's at 967. That's what it looks like. I have long. Yeah, it's interesting. It's going to go basically for years, not for years, but for the last thing at about $10 a share. Then, the debacle happened. We had this blow off top. Now I sold out. I sold off in the 30s. The high was 42.48 on this. It's now bounced basically with the market, and it's basically trending down. This leads to it's probably going to bounce. It's probably going to bounce at 10. So I don't know if you want to play this. I wouldn't be in it right now. I'd wait until it gets down to about 10 before. I think so. I think I'm on the spot. Probably it's up there. You're going to see there so much because that we're going to sort of this, and is it going to get up? A big boy because they are, because the numbers on unemployment this week. I think I do agree with this. I do think there's a possibility there. So, thoughts on airlines? Wow. God, the airlines right now, I think the airlines are just going to be crippled. Let me look at Southwest. Southwest is probably Southwest is probably the best of the airlines in terms of profitability. It's trading choppy at 36. Most of the other airlines are just frankly going to be in trouble. I think that you're going to see the two best airlines, I believe, are Delta, DAL, and Southwest, which is LUV. I like Southwest better than Delta. Everyone likes Delta better, but I think Southwest is actually better positioned. It's holding up fairly good, and I do, but it's going to be horrendous. I mean, the airlines, it's just not, at least not for the foreseeable future. It's not going to be good. Now, when this thing, by the midsummer, there might be a buy, because we might be but I don't think it is now. Significant down. Yeah, I think so. I'm not sure if it's going to be Tuesday or Wednesday, but I'm pretty sure it's going to be this week. I think you're absolutely spot on. What do you think the market will drop? Okay, well, the reason I think the market is going to drop on Wednesday is because we haven't really gotten the reporting yet of all of this unemployment that's happening. But I know anecdotally, just from my friends and their businesses, they're all hurting. Restaurants, they can't serve anybody. So they've had to basically lay off everyone. Well, a lot of these restaurants are not going to come back. They just aren't, because, when this thing is over with, and it's not going to be over with that soon, I don't think, people are just going to hoard their cash, and they're not going to go out and spend. So a lot of the discretionary spending is just going to go away, at least temporarily. I think you're going to see a lot of people selling things for cash. I mean, I think you're going to see people selling cars for cash. Short term, I think the thing to do is have this cash, because I think that the government is incompetent. I don't really think. I just think that these are the things that happen in any market economy, in any economy in general. And I mean, they could not predict the coronavirus. I mean, they could not predict the coronavirus, and frankly, it's wreaked havoc. Now, a lot of people will say, well, they should have thought of that. But, well, I don't know. I don't know. I don't think you really could say that the government is incompetent. Now, a lot of people are going to feel that way when they're losing their jobs. I don't doubt that. But, at the end of the day, unfortunately, really, you're on your own. And that's why you always should have some cash on hand. And also, you should pay off your debts before this. I was fortunate. I was lucky because I've been through two of these before. So I was fortunate. I was able to pay off a mortgage and pay down everything before this happened in January. So I'm counting my lucky stars, but not everyone's that lucky. So it's just, guns and ammo stocks. Apparently China, I would be skeptical about that. But if they do, that's great. If they have an antidote for this in China, that would be fantastic. I just don't think they do. China would have alarmed the world contained it. Thoughts on when? Boy, oh my! I was just reading an article over the weekend about Las Vegas. I mean, it's going. I mean, all the big laid off there. By the way, if you're a real estate investor, in about a year, this is going to be super cheap. Everyone's going to be losing their home. Now, I don't know how cheap it's going to be, because this time I don't know, if they're going to allow short sales again. But I think that Las Vegas is basically going to, and a lot of people are going to have to move, and they're. I suspect it's like Wisconsin, fairly stable. I think, in the West, I'm California. Unfortunately, economy, outside of the coast. I mean, in the coast, they're not so much, but the rest of the inland part of the West, it's a very much of a boom bust economy. And I think that's what they're going to have to deal with in Las Vegas, unfortunately. And I feel bad for them. Are you buying and holding till this is over? No, I am not. I am currently all in cash. I'm waiting for the bottoming to happen, and I'm shorting. That's really all I'm doing. Do you think the stimulus bill is working? I don't think that. Well, I think it's too soon to say. Do you think the results are going to turn out Q2? Yeah, I think thoughts on Ford. Wow, I think Ford actually could go bankrupt, and I know that's terrible because it's one of the great American companies, but I think Ford is going to have to start shutting down plants, or else it's going to go out of business. And the reason is because there's literally no demand for their product. They have tons of F-150s sitting on lots that they can't sell, and it's just going to be horrible. The only thing that's going to sell going forward in this market are electric or used cars. And used cars, people won't buy. I think they were the one company last time under the Obama it's a tragedy because they did the right thing and yet they're going to get punished on the back end. But I would not be a buyer of Ford. I think Ford is going to be in a world of hurt. Their stock price, yeah, there's $5 for Ford. That's ridiculous. That's company. They produce a lot of cars, but you can see how much it's kind of a tragedy. Okay, can you please share your thoughts on G? Okay, let me check. SH. Yeah. Wow, $14. Okay, this is oil and gas ETF. Is this the bull? Yeah, this is the bull. Awesome. Okay. Wow, this is interesting. Okay, so this is the bull ETF on oil and gas. Well, it's up. I mean, it's up to 14. That's not bad. That's interesting. It's been trading very thinly, but all of a sudden now there's a lot of interest. This one might be a watch list one. Let me write that down. Thank you very much, Bobby. Appreciate that. GUSH. Okay, for everyone out there, what this is that this is a ETF. This is a directional ETF on the oil sector. It's very interesting. It's a good company that's sponsoring it. I like Direxion. I think they have a good product. It's a 3x ETF. So for every move, and this might actually work because for a move higher, it's going to be amplified 3 times. So if we believe that oil is at its very low, it's probably just going to go higher. Now it may go down to $10. But this one's a very good one to watch list when there's a turn. Thank you very much, Bobby. I appreciate that very, very much. On MGM and Penn Gaming. I'm unfortunately stay away from the gambling stocks. I just don't think they're going to do well. The most vulnerable sector of the economy is travel and leisure. And MGM and Penn National Gaming are right smack in the center. I'm thinking more gamble. It's just going to be people just are going to cut back. What is the best stock? You think the TVIX is done? I think so. I don't think we're going to see the TVIX because I just don't think we're going to see that much change. I mean, you should be able to make some money on the TVIX, but the TVIX really I think is pretty much we've had the initial down, we've had the initial shock of the down, and so really the only time that we're selling at 372.95 right now, and at that price, that's about right. Normally the TVIX should be. The normal price for the TVIX is about $54. Okay, but we have heightened volatility, so it's going to be up. I don't think we're going to see. We had essentially a blow off top on the TVIX. I don't think we're ever going to see 1,000 again, at least not for a while. I know you wouldn't agree, but I took a small position. Well, that's cool. I mean, if you did that you did very, very well. Okay, okay, 12. Okay, that's necessarily bad. That's really a contract. You know, I mean, it's not a bad position idea. That really isn't, because the beat up sector, right, clearly is oil and gas. It's clearly the most beaten up. So it may work. I lost money on the TVIX. Do you think? No, I don't think so. The TVIX is old, underrated, in your opinion. I think gold is, wow. Why? Everyone says it go to gold. Well, this is not very shock. Gold does well. We're in a deflationary stock. People don't shock. People do not have enough cash. Is the king right now, and so the problem is gold is going to go buy it at 1,600, 1,700. It's going to go right down to 1,350. Gold is only a buy when it's about 1,250 to 30. So I think you're going to lose. This is my opinion. Thank you, man. Watching me, amazing than anybody else did. So I'm trying to, as much as I can, share some of my thoughts. But don't get depressed on this market, because you can make money on this market. All right, but the money to be made is right now to be in cash and short, and these bear ETFs. These bear ETFs are definitely good in this market. Now, there is one that I like. It's called the PSQ. It shorts the QQQ, and currently it's down right now. But I think it's going to bounce around. It's about 25. Right now, according to this, is 25.26, which is basically pretty much fair value. Now, if we take another leg down, which we're not there yet, that's why I keep talking about the spider. But if we take another leg down, this one might be something that you want to look at. The PSQ and the SQQQ, if we take another leg down. We're not there yet, but put this on your watch list. Thank you, man. I got greedy and didn't know when to stop. Okay, this is why when you trade these like on a day trade kind of thing where it's moving really quickly, and this is a real hard thing to do. But if you're up 20% on your position, sell half your position immediately, take it in cash. It's a really hard thing to do. I had to learn it over a number of years, but it pays off. By the way, the spider's up to 260. That's very interesting. I think that this may be a short by Wednesday. It's not currently, because I think it's moving up, but we're getting a pattern what they call railroad tracks. And when you get railroad tracks, that means it's gonna change drastically to the downside. And we're getting a chart pattern called railroad tracks, which that's what they call it. Dollars today. How it opens tomorrow. If it opens probably go over, then it's a this is based on much, but I'm thinking the TVX will hit 450. I don't think so, but I don't think that the TVX, it's these times the 2 times is, I don't think the volatility is going down, but I don't think it's spiking either. If it goes up, the VIX will go up. If the volatility goes up, the VIX will go up, and the TVIX will go up even more because it'll if the volatility stays high and doesn't change, I don't think the TVX couldn't be in it right now. Just my a better all the time. TVX is not, but it's just have to be super careful with on it. You can't. This is when you cannot with the two glued to the screen because it can 300. It's investment quality. It's a way that you can. When the markets change, you can make a lot of money quickly, but I think we're beyond that point. So I wouldn't be in the TVX right now because I think you could get really skinned in it at this time. There may be another time for the TVX, but it's not now. Well, I've gone and ranted on for about an hour, and I so appreciate that everyone tuned in. And I'm going to be back on tomorrow, and I hope that everyone gets into cash, gets ready, because there's going to be some money to be made. And by the way, if you could go to my website, DallasTradingFloor.com, put in your contact information. I'll try to send you. I'm going to try to do this new thing with some trade alerts if I can. So I feel the SQQ. I'll go right now. The SQQQ only if the market changes direction. If the market changes direction, the SQQQ definitely will go up. But right now, it's trending lower. It's 1936 right now, and I don't believe it's going to turn until the market turns. And right now, and how do you find out if the market is turning? One of the indicators for me is what the spider is doing. If the spider hits 270 or 275, I think the market's going to turn right now. It's at 260. Well, it's 259.76 right now. So thanks so very, very much for everybody tuning in, and I hope to see you tomorrow, same time, same, as they say, same bad time, same bad station. Anyways, talk to you soon. Thanks, and be well. Bye-bye. And for everybody watching on YouTube, I'll be on tomorrow at the same